Why do some traders make money and keep it, while some traders make money sometimes and then lose a lot of money, and some traders have very high drawdowns and some traders have low drawdowns? Now, this is not a function of the trader's psychology or trader's personality. It is more a function of inherently the kind of setup which you are trading. Certain kind of setups have high drawdowns. Buy and hold kind of investing is going to involve large drawdowns, because by definition, if you're going to buy and hold during that particular period of 5 to 10 years, the stock is going to go down a lot many times. So that is one of the limitations of certain methods. So drawdowns are function of what method which you select. Now trend traders, those who do trend following, again, if you see most of the trend following kind of methods, and if you see most of the back tested most of the trend following methods, they are very high drawdowns. And the trend followers believe that in order to catch a big trade, they have to have that kind of a drawdowns, and also the win rate on some of those methods is very low also. Similarly, if you see mean reversion kind of systems which are traded by many traders, mean reversion kind of systems for many months or years can perform very well, and then suddenly the market situation changes, and all the profit which you made in 1 or 2 years or 3 years can be wiped out in a very quick time period. That is why you will recurrently see traders who trade mean reversion kind of system, unless they have some sort of a filter, they just like get into 60-70% kind of drawdowns. So understanding the kind of setup which you are selecting and the inherent risk involved in the setup which you are selecting is important. And this is also one of the reason why swing trading is a predominantly the kind of style which is used by most traders, because if you look at, and if you go back and look at the history of the market, earlier trend following was the predominant way of trading because the commissions were high, and also the entire industry of commodity trading advisors was dominated by trend followers. And the trend followers used to have very good years, 2 or 3 good years when the trends were running, and then they used to have horrible drawdowns. And that is where alternative kind of trading style evolved, which is short-term trading. And as the commission kept on decreasing, short-term trading became more popular, and it became one of the mainstay method which is used by traders because it allows you to have a lower drawdowns inherently. The idea behind swing trading is to have low drawdowns and have lower exposure in terms of time commitment to the market. Now, if you select the right kind of swing trading, that is what is going to happen, that you are going to have large number of trades with a smaller amount of profit, but your drawdowns will be smaller. If you inherently select a method which is like say options, and on in options, if you're trying to do like options on mean reversion kind of basis, or like you're trying to sell premiums, you will see that uh, many times for months you're going to make money and then you're going to blow it up in a short period of time because the market dynamics changes, and if big moves happen or the volatility increases, suddenly your strategy completely wipes you out within few sessions. So these are some of the things which uh, as a beginner you may not be thinking, or as a beginner you don't have enough comprehension, and then you get attracted to certain kind of styles which is like buy and hold, or certain kinds of styles like swing trend trading, and then you're going to discover at some stage that they have large drawdowns. Similarly, when people trade mechanical methods, many mechanical traders, they have big drawdowns, and that's why the sophisticated uh, mechanical traders, they put in filters or they abandon a system if it reaches a certain level of drawdowns. So those are all the techniques they use, but at a more fundamental level, your drawdown is going to be a function of the inherent setup or inherent style which you decide to trade. And then you need to be comfortable with that, because if you are going to get into a method which involves 60-70% drawdowns, it's very difficult method emotionally and psychologically, and also in terms of realistically trying to recover from a 60% drawdowns is going to be very difficult. It is going to take a lot of time, and that time is a wasted time in terms of opportunity cost. So think through what methods you want to trade and what is the inherent drawdowns to those methods, and look for the worst case scenario, not the best case scenario. And if you do that, you will gravitate towards certain methods which traders have adopted for that simple reason that they are lower drawdowns and they limit your exposure to the market, or they are not buy and hold kind of methods. So this is something for beginner traders to think about.